United Airlines reporting quarterly results. Profit is up more than 20% thanks to strong international travel demand. But the third quarter forecast came in below what was expected as an oversupply of flights weighs on fares. Joining us right now with more on this is David Vernon, Bernstein senior research analyst. Let's talk a little bit about this, David. It looks like there are other carriers who are cutting their rates that they charge consumers just to try and make sure that they are able to maintain domestic travel at this point. What does that mean? What do you see happening?
Well, so I think it's definitely weakness on fares right now, but I think it's really the industry grew too fast relative to demand, which is pretty healthy. So we've overshot on the capacity situation, which is creating negative pressure, particularly in the main cabin. We've known this since Americans guide down at our conference a month or so ago. Delta, similar numbers. And I think the market was braced for 3Q to be light, maybe kind of around where they guided. So I don't think that this is a huge negative surprise from where buy-side investor sentiment was kind of coming into the print.
This feels like the same old story again and again and again with the airlines, where they don't have enough capacity, they try and chase demand, they get to overcapacity, and then it becomes a problem from a profit perspective.
There's definitely some elements of that happening again. I think what's different, though, is that in this period of overcapacity, carriers like Delta and United are printing very good earnings, while discounters who would normally be adding that capacity to take share are not making as much money. Southwest has a lot of profit problems. Spirit has a lot of profit problems. Frontier has profit problems. So the way the airline industry is marketing its capacity is shifting the burden of that overcapacity situation onto the lowest cost carriers. Their only option is to reduce capacity and raise fares, which then in turn is good for carriers like Delta and United, who are already operating at a higher level of margin.
Why is it different this time? What happened?
I think it's a little bit about how the airlines are bringing their capacity to market. Historically, the industry has always had this, one coach fare that they're trying to price down to fill the cabin with. And if you've got a cost position and a product that is, out for sale that isn't that different from a discounter who's got a lower cost position, you have a lot of negative pressure on your fare ladder. What the industry has done, led by Delta and now followed by United more closely, is really segment that cabin into different products. Put a product out there that is a basic product, very similar to an unbundled discounter. That capacity that's now flooding the market in the low end of the space is from Delta, United, and American, but it's not negatively impacting their entire fare ladder. Further up in the cabin, they have comfort products that are at a higher price point. They have a main cabin experience that's a little bit different. You get to bring bags. They've taken away change fees. So they've added amenities to the products that are now giving them an ability to extract some of the consumer surplus that's been lost for decades in this industry.
Very interesting. What do you think about American, Delta, United shares?
American's a little hard to defend these days because they've got some commercial leadership problems. I think with Delta and United, it's a cleaner story. United in particular, if you look at the two stock prices, they're not too dissimilar. Delta's at 45 or so. United's about 46, 47. At the same time, in 2024, United's going to be earning $9 to $11 a share, and Delta's going to be in the $6 to $7 range. So there's a little bit of a mispricing there. I think there's a lot of upside in United if the industry can go ahead and rein in its worst behavior on the capacity side, because I think that capacity is going to be coming out at the low end of the market, which is going to be really supportive to the higher margin airlines during 2025.
If you had to pick one between United and Delta, which one is it?
I think it's United, given that mispricing. The stock's about the same price, and they're going to earn 30% more this year.